Hey friends, starting 1st December we have a new IPO of Tega Industries. Actually it is not an IPO but an OFS, that is offer for sale. So the difference between an IPO and an OFS is that in IPO the company raises new fund by diluting its equity, whereas in OFS the company doesn't raise new fund. It is just a change in ownership from promoters where they sell their equity to DIIs, FIIs and retail investors. Now there is a misconception that an OFS is always bad. The general understanding is that companies taking advantage of recent IPO boom and selling their stake. While some companies do take advantage with OFS, it is not always the case with every company. So IPO is not just about raising money. Sure, raising money is one of the most important part of IPO, but what if the company already has a good amount of money and doesn't need to raise more capital from the IPO? In that case, the company can still go on with the listing on stock exchange because a company that is listed on stock exchange commands more credibility and name. Of course, be it an IPO or OFS, the most important part is company's fundamentals and valuation. So this OFS of Tega Industries is also similar, where company is not raising money for expansion. They just want to list themselves on the exchanges, as public listed companies have more credibility when companies pitch to clients for businesses. So in this video, we'll quickly look at the business of the company, its promoters, future plan and financials. Then we'll look at the IPO details along with valuation. Finally, we will decide if this IPO is worth applying for or not. Alright, let's get started. Established in 1976, Tega Industry is an engineering company that manufactures engineering product for the mining industry. It basically helps the mining companies with critical component needed throughout the value chain of mining, screening, grinding and material handling. Its product portfolio comprises more than 55 mineral processing and material handling products. Globally, Tega Industry is the second largest producer of polymer-based mill liners that find application in grinding purpose. Its products help mining companies with reducing downtime and maximizing operational efficiency that eventually result in high revenues and profits. If you look at the revenue breakup, around 85% revenue of the company comes from outside India, mainly from North America that contributes 13.7%, South America contributes 24.7%, Europe, Middle East and Russia contributes 15.5%, Africa contributes 22.6% and Asia Pacific contributes 9.85%. So South America and Africa are the largest market, although the revenue is nicely diversified across the world. Company is also expanding its operation in North America, South America, Australia and South Africa. Its end customers are mineral processing sites majorly involved in gold and copper ore extraction. Tega Industry has 6 manufacturing sites, including 3 in India, whereas 1 is in Dahej, Gujarat and other 2 in West Bengal. And the other 3 sites are in major mining hubs of Chile, South Africa and Australia. Their current overall utilization is 54%, so the company can manage the further demand in the future with its existing capacities. Company has 18 global and 14 domestic sales offices. One of the most interesting aspects of Tega Industry business is that its products are very specialized and critical to operate and have high barrier to replacement or substitution. For example, it is the second largest producer of polymer-based mill liners in 2020, which is nearly an oligopolistic market. That is a market controlled by a very few players. Mineral processing sites do not tend to switch to a substitute supplier even if the product offered by a new entrant or established substitute suppliers is relatively cheaper. This is due to the fact that there is high cost of initial planning involved, the lead time required for approval, then degree of certainty of products of an established supplier, then high cost of downtime or shutdown of a site. Hence, Tega Industry has the flexibility to maintain high margin throughout the period of its association with the mining processing site. Interestingly, the company generates recurring revenue as the mining process includes regular operational expenses. In the last 3 years, around 75 to 80% revenue of the company is from the repeat orders. In fact, the company is not impacted with the cyclical nature of mining business or fluctuation in commodity prices. If you look at the innovations, company has been granted 8 patents and 4 patent applications have been filed for approval. If you look at the promoter of the company, it includes Madan Mohan Mohanka, who is the chairman and executive director of the company and holds engineering degree and MBA from IIM Ahmedabad. He has been associated with the company since inception. Next promoter is Mehul Mohanka, who is the MD and group CEO. He holds the master degree from University of Pittsburgh and advanced management program from Harvard University. He has been associated with the company since 2 decades. Overall, the senior leadership of the company is looking very experienced. If you look at the risk, then one of the risks is that company gets repeat business from its existing customer, so any loss in existing customer can impact its business. If you look at the future growth, there is a shift from non-renewable sector to renewable sector. Be it your electric vehicle or solar power, the focus is on renewable sector. Now, one metal that is the most essential for renewable sector and energy transmission is copper. So on one side, there will be slowdown in coal mining, but there will be growing demand for copper mining. There will be demand for lithium mining due to its usage in lithium batteries. Then there will be continued demand for gold. Then there is high demand for infrastructure building in India, and government also has a lot of focus on manufacturing with PLI scheme. All these factors would eventually result in more demand for metals and minerals. This would continue to drive the business of metal companies and eventually Tega Industries. If you look at the global market size, global crushing, screening and mining process equipment market size is estimated at around $20 billion in FY20. Although there was decline in growth due to COVID, but industry is likely to recover and forecasted to reach $37 billion by 2030 at 6.3% CAGR growth. If you look at the revenues, Tega Industry revenue have grown from 643 crore in FY19 to 856 crore in FY21. Its profits have grown significantly from 32 crore in FY19 to 136 crore in FY21. One of the reasons for high growth in FY21 is due to an increase in operating margin that increased from 16.8% to 27.8% in FY21 due to lower expenses on account of COVID restriction. If you look at the ROE and ROCE, company ROE has increased from 8.14% to 22.23% and ROCE has increased from 11.2% to 24.7%. Although now that the economy is opening up, I expect the expense cost to increase and margin would reduce. That would impact the profitability. Company has debt to equity of 0.31, that is comfortable. Overall, financials for last 3 years are looking decent. Tega Industry IPO window is between 1st December to 3rd December. Its IPO price band is between 443 to 453. Face value of each share is Rs 10. Market lot is 33 shares and minimum investment is Rs 14,949. IPO issue size is 619 crore, which is a complete offer for sale, as the main intention of this OFS is to list the company in the Indian exchanges to gain credibility. So this is a very small IPO. Now there can be a question that when the company has total debt of 187 crore, then why can't they raise money or use the existing money to close its debt? So the reason is that the leverage cost in their sector is very low. Hence, they don't want to close the debt, which is well under control. As far as future growth is concerned, company has a cash balance of 47.8 crore as of FY21. At higher price band of Rs 453, Tega Industry would command a market cap of 2,600 crore. Company had an EPS of 24.1 in FY21. So that means the PE ratio would be around 18.7. Although if you look at the last 3-year average EPS of 16.87, the PE multiple would be around 26.8. Now that looks like a very reasonable valuation. If you look at the valuation of other listed players, company has mentioned AIA Engineering as its listed peer and it's trading at a PE of 30.6. So overall the valuation of Tega Industry is looking very reasonable. As far as grey market premium is concerned, company is commanding latest grey market premium of around 300 rupees. So that's almost 66% premium. One of the reasons for high premium is because the IPO size is very small, so there is more demand and less supply that increases the grey market premium. And company is available at decent valuations. Overall, if we conclude, Tega Industry is an engineering company that manufactures critical components for mining industry that find application across value chain of mining activities. Company has a strong dominance in the global market with presence in every geography. The promoters and leadership of the company is also looking solid. As far as future growth is concerned, mining would continue to grow due to demand for metals like copper, iron, gold, silver, etc. Although it is not a very fast growing sector. Tega industry profits have grown at a very good rate and has decent profitability. Overall, it is looking fundamentally strong and I would rate it 4 star out of 5. As far as valuation is concerned, again the valuation is looking good and I would rate it 4 star out of 5. There is also good demand in grey market premium. So this company is looking good for short-term listing gain as well as long-term investment. I am going to apply for this IPO. Now tell me in the comment what is your take on this IPO. Will you apply for it or not? I'll see you in the next video. Till then, take care.